Okay, welcome back. This is part 2 of lesson 2. So picking up where we left off, we just finished talking about taxes, and now we're going to go into a little more detail about your paycheck and those taxes and other withholdings. So remember, when we're talking about our paycheck, we have our gross income, which is the amount we make before taxes. Then we subtract all those taxes and deductions and other withholdings, and that gives us our net income or our take-home pay. So that should be grinded into your head by now. Okay, so I mentioned there are several other deductions besides taxes, and we're going to kind of walk through those. First of all, we mentioned FICA, and I have some notes over here too that I'm going to kind of read to you. FICA combines both Medicare and Social Security. So you may only see FICA on your check instead of both Social Security and Medicare. So we looked at that example paycheck, and that had Social Security and Medicare both spelled out. Like I mentioned, though, you might sometimes just see FICA and those amounts added together. Federal income tax is deducted from your paycheck also. We talked about that. And then how much is deducted is dependent on your total income, the number of people living in your household, or dependents is what they're called, whether you are single or married, and your tax bracket, which is determined by your income. So those are all factors that go into how much you will be contributing towards your federal income tax. State income tax is also withheld. A portion of this is depending on the state that you live in and its tax policies. So, and last I heard, Colorado has one of the lowest, no, it's lowest sales tax, I think, is what I read. So we still have state income tax too, but not all states do. Okay, a portion of your paycheck may also be deposited into a savings account. So we saw on that sample paycheck there were some other deductions. Some people can choose to have some money set up to automatically go to different accounts. So maybe they set their paycheck up so that whenever they get it, automatically $200 is sent over to their savings account. This is a great idea. A lot of people do this just because if it's set up that way, then they don't have to worry about it. They don't mess with it. If that money's not there, they're not going to spend it on something that they don't need. It goes directly into savings. So you can set up your paycheck to operate like that. You might also have some money going into health insurance, dental insurance, life insurance, disability insurance, and you can have that set up too to automatically take money and put it towards those different insurance policies. And you also hopefully will start a 401k or some type of retirement plan once you get your career. So you're going to be wanting to contribute money from your salary to that as well. So again, on top of your taxes, you can set up these other withholdings to automatically distribute your paycheck to these different accounts so that you don't have to worry about it. Okay. Now you should be watching. Take a minute to watch the tutorial on we're on page 10. Watch this paycheck tutorial, okay? It talks you through Kathleen and her experience with her first job and how much she's getting paid, how her net income is being calculated from her gross income. One thing I would like you all to do is to click on this link that says download the PDF script and save it, because we are going to be, this is a part of an assignment that you have coming up later, the creating a budget assignment. So you will want to have this information on hand. So this is just the script from the video, and it takes you through step by step. She's going to make $30,000 a year. She's in the 15% tax bracket. It says how much she can expect to be withheld from her paycheck, and what she has going towards a health plan, what she has going towards her 401k plan. So look over all of that information, and we're going to use that when we go to set up a budget for Kathleen later on. Okay, so again, watch the video on page 10, and here's just a couple questions. What's Kathleen's net income? So we saw that she makes $30,000 a year. That's her gross salary. So read through that and see if you can figure out what her net income or take-home pay is going to be. And again, download and save that PDF so you have that available when we work on that assignment together. Okay, So, how much is going to be withheld from your paycheck? That is dependent on a couple of things. So, what you do when you first get a job, they're going to make you fill out a W-4 form. Some of you might have filled out this form before. Some of you may not have. But this W-4 form is filled out by you, the employee, and this form by filling out this form, this lets your employer know how much they need to withhold from your paycheck in order to cover taxes and other withholdings. So it's filled out by you, and then you give that to your employer. So your employer, when they go to give you your paycheck, they know what they're taking out for taxes and such. So in your text on page 11, go ahead and follow along with me, and we'll fill out a W-4 form together real quick for Jim Smith. Okay. So this is what a W-4 form looks like. You might have seen one of these before, or you might not. Hopefully my little video screen's not really blocking everything. But so again, this form is used for, it kind of tells you some things up here. The purpose of this form is so that your employer can withhold the correct amount of federal income tax from your pay. All right, so I'm looking on page 11 of 23, page 11 in your text here. And it gives us the scenario of Jim. So we're going to fill out this W-4 form for Jim. Okay. Okay, so our situation is Jim Smith is a 17-year-old who just started his first job at any store in any town, USA. These guys are really creative. Jim is not married and does not have any children. Jim's parents still claim him as a dependent on their tax return. So that means they are claiming him as a dependent, so he does not have to claim himself as a dependent. So when Jim goes to fill out his W-4 form, I wonder if this will let me type. Okay, it does. Okay, so as you're filling out this W-4 form, this top part is just kind of a worksheet to help you figure out what you're going to claim for tax purposes. So this line A says enter 1 for yourself if no one else can claim you as dependent. So we can't enter 1 because Jim is still a dependent on his own parents' tax return. So we will put in a 0 for this position. Enter 1 if you're single and have only one job. He is single, but he's still a dependent, and he's not married, and he has no wages from his spouse's wages. So we can put 0 there as well. Enter 1 for your spouse. We don't have a spouse because we're Jim and we're 17 and not married with no children. So putting a 0 in on that line. Enter the number of dependents other than yourself or your spouse. He doesn't have any kids. So that's what a dependent would be, someone that depends on his income in order for survival. And he doesn't have anyone that is. Enter 1 if you are head of household on your tax return. So since he's still dependent and probably living with his parents, he's not considered a head of household. Enter 1 if you have at least $1,900 of child or dependent care services. He has no children, so that's 0. Child tax credit. Again, no children. And then you add lines A through G together. So again, this was just kind of the worksheet to let you know what you're going to be claiming on your W-4 form. So in this instance, we are claiming 0. And so that tells the IRS then what kind of tax bracket we need to be in, what we need to be paying for taxes, and so on and so forth. So then you would just go to fill out the rest of this W-4 form. You would fill out all of this information. So we'd say Jim Smith. It doesn't give us a social security number, but you would have to put yours in there. We'd mark single and city, any town, USA. Okay, so then down here on line 5 is where it says total number of allowances you are claiming. So that's where we would enter that 0. So depending on this first line, if your parents aren't claiming you as a dependent, you could put 1 there. So make sure you're checking with your parents to see what they might have some input on that, whether you're claiming 1 or 0. Okay, so additional amount, if any, you want withheld from your paycheck. So maybe you want some more to go towards paying your taxes anyway, so that maybe you get a bigger tax return later in the month or later in the year. So you can put that amount here if you'd like. And then there are some terms you can claim exemption from withholding anything if you meet some of these conditions down here. So, but this for Jim, we're claiming 0, and we'd have to sign this, date it, and turn it into your employer. So it's that easy to fill out a W-4 form, even though it's really intimidating looking because there's all the fine print. And again, on the back is just another kind of worksheet to help you with calculating deductions and stuff. I've never messed with anything on the back of the W-4 form, so I'm not going to go into a lot of detail on that right now because I'm not really familiar with it. But that is the basics of a W-4 form. Okay, let's move on now to a W-2 form. So this form is filled out by your employer. It is a form that says the wage and tax statement showing the employee's wages and taxes withheld from their wages. So it's kind of a summary of everything that you made and that you paid that year as far as taxes go. This form is then submitted to the IRS for tax filing requirements. And on page 13 of your text, we have an example of Erica Black. So this is kind of what a W-2 form looks like. It's filled out by your employer, and they should be mailing this to you to help you with filing your own taxes. So again, this is for Erica Black. It shows her social security number. What was Erica's total earnings in 2009? We can find the box, wages, tips, other compensation is $12,312, as we can see right here. How much federal income tax was withheld from Erica's paycheck? You can see this box right here says federal income tax withheld, $984.96. So that's basically it's a summary again of what you made and what you paid in taxes that year, and you'll file that. That's what you will submit to the IRS when you're filing your taxes. So pretty easy stuff, even though it's kind of overwhelming when you sit down and look at it all. Okay, let's move on to creating a budget. I have a budget. Well, having a budget is a great way to plan ahead. It helps you anticipate any expected income, expenses, helps you with a savings plan, helps track other spending. Let's go over quickly, because I want to keep this under 15 minutes, types of expenses. So you have your necessities or your non-discretionary expenses. Non-discretionary is just a synonym for necessities. They are expenses that are absolutely necessary. This could be like an electric bill, utilities bill, those expenses that you need to live. Non-essential or discretionary expenses are items that are not essential. So this would be an expense that you incur when you go out on the town with your friends, maybe a gym membership. None of these things are required in life, so they're not essential. You still have them. Most people still have them. And we also have fixed expenses, so where you have the same cost month after month. And this could be like a gym membership is usually a fixed expense. So you have a membership plan where maybe it's $25 every month and you make that same amount, that same payment every month. Same with a car payment. It stays the same from month to month. And there's also variable expenses. So these are not regular. They could be expenses that you have every month, but the amount could change every month. So for instance, maybe you have a car payment or a car repair that month, or maybe you ended up having to go to the doctor that month. So those amounts can fluctuate from month to month. So when we're talking about a gym membership, this would be a fixed routine discretionary expense because it's fixed because it's the same from month to month, but it's discretionary because you don't have to have it. What kind of expense is your monthly rent? This would be a fixed necessary expense. And I know I'm rushing here. What kind of expense is your electricity bill? This would be a variable non-discretionary expense. So it's variable because it fluctuates from every month, but you still need to have it every month in order to survive. Okay, I gotta wrap this up and do one more short quick video.